Hi everyone, Callum here from the DIY Investing Guy channel. I'm the DIY Investing Guy, which basically is just do it yourself investing. I'm not relying on a robo advisor or an institution to run my investments for me. I'm choosing my own investments, whether that be funds, investment trusts or individual stocks. I've done a previous video on a review and preview of my portfolio, my ISA portfolio with the broker Hargreaves and Lansdown, going through my performance in the last couple of years while I've been investing with them, and what I've invested in the past and my current strategy going forward. The portfolio today is if you can see on the screen, this is unrealised gains. So unrealised gains on my current hold, it's just on what I'm currently holding in my portfolios, the current investments I have, not on all my investments over the course of the portfolio's history. So my current unrealised gains are £912.49, and that is plus 4.88%. Obviously I don't really pay much attention to the daily gain loss because that changes intraday depending on where the stock market's going. But overall in this portfolio, since I started investing 2 years ago, I'm £6,626 up, not including lifetime ISA bonuses, which I've had £3,000 of. That's excluding them. So overall, just in capital gain, dividends, payments, etc., I'm £6,626 up, which is a compounded rate of 39.43%. Now I'm investing in ISAs because they're a tax wrapper and my investments grow tax free. So if in 20 years time I've got a capital gain of £100,000, all of that £100,000 will be totally tax free. I'll be able to withdraw that. Whereas in a pension, I have got a pension, but within the pension you get 25% of it free, tax free, and the rest of it's taxed at your normal income tax rate of when you retire. I'm not a financial advisor, so I'm not going to go into too much detail about tax rules and stuff, but that's why I'm investing in an ISA basically. So yeah, I'm going to go through what I've invested in since my preview. I've invested in some individual holdings and I'll go through why. I've also done some individual videos on the holdings that I've invested in, the individual stocks that I've invested in. So I'm just going to get straight to it now. First of all, I was going to the stocks and shares ISA. That hasn't changed since the preview. Obviously, Baylor Gifford America Fund has increased a little bit, and it's now in the blue again. I started buying this at its highs, so I had to average down a little bit into it while it was dipping. But yeah, so I got the brunt of the February sell-off on tech stocks and whatever else because of bond yields and yield, the yields going up, so, and all that sort of stuff, and the tech sell-off. So I got the brunt of that. So that's why I'm only just back in the blue on this fund, but I see it as a long-term holding. I do like the way they invest. They invest pretty much in very similar disruptive innovation, what ARK Investment would call disruptive innovation, and Cathy Wood's coined it of ARK Investment. And it's hard to find a platform where you can invest in ARK investment ETFs in the UK, but Baylor Gifford America and Scottish Mortgage Investment Trust are very similar to those, except that they're not as outspoken about it as Cathy Wood's, but they do invest on the same sort of principles and philosophies as the ARK Investment Trusts do. So that's why I'm invested in that. It's a long-term holding. I'm only 30. I've got a 30-year time horizon on my investments, so I'm going to go for more growth than I am for dividends and stuff like that at the moment. That's pretty much where I am at that. It's gone up a little bit on my stocks and shares ISA. Obviously, it's a new stocks and shares ISA year, so I'm going to be looking to try and get as much into these ISAs as I can this year. I'm going to really give it a good go. I've paid off all my debts last year, so I'm going to give it a good go in getting as much money into these ISAs as I can up to the annual allowance. But first I'm going to try and fill up my lifetime ISA, purely because for every £1 I put in, £4 I put in, I get £1 government bonus. So I can put up to £4,000 in a year in this and get £1,000 government top up. There are penalties for withdrawing from this one, so that's a downside to it, but I have done a whole video on ISAs if you want to check that out. The lifetime ISA is my main portfolio. I opened it a couple of years ago and it's done pretty well. My first ever investment in this ISA was a pretty, it was a big boo, a big Homer Simpson dough moment. I'd put £100 in my ISA just before Christmas, and I thought I'd have a go at this investing stuff, and I decided to invest in a company, and I decided to buy one share in GlaxoSmithKline, which one share cost roughly about the time about £14 a share. But what I didn't realise is, because I hadn't done my research, I hadn't done my investigation, that you get a trading fee of roughly about £15. That's including stamp duty and stuff. So I bought a share for £14 and had a £15 charge on it. So in effect, I'd lost 100% of my investment before I'd started. But in hindsight, I'm glad I did that, because if I hadn't have done that, I would never have got into investing and I would never have started. And the main thing that you can do is start. If you start investing, as providing you've got, it's not with money that you're going to need in the immediate future. It's probably one of the best things I've ever done, started investing. I love it. There's not one way to invest. And I'm still learning as I go along, but yeah, I thought that'd be a funny story to start off on how my investment journey started. Lost 100% of profit in about 2 minutes. Yeah, so we're getting to the lifetime ISA now, and I'll show you, as you can see, I've filled up £300 so far. I'm going to try and put about £300 a month in, and throughout the course of the year, because that should get me to around about the £4,000 over the 12 months. I don't want to put £4,000 in at the start, even though it's better to fill your ISAs up at the start. I don't want to lock my money in a lifetime ISA, which I won't be able to access till I'm 60. So that's why I'm only putting about £300 in a month. As you can see, my lifetime ISA is now over £20,000. It's had another decent week this week. Last couple of weeks haven't been too bad on the stock market, especially what I'm invested in. And I've had 2 positive weeks since the it was pretty, I'd say, well, it wasn't a bear market, it was a correction, wasn't it? About 10%, something like that. Especially in tech and them sort of sectors. A lot of the sectors that did well last year during the pandemic got hit hard in the recent sell-off. So I'll just go through my holdings now, and I'm going to go through what individual holdings I've brought and added to my portfolio to give it a bit of spice this month. And if I'm going to go into individual holdings, I'm going to do my research, and I'm going to go in with a decent position. I'm not just going to go in, especially my ISAs, my Freetrade account, I'll average in and try and build positions in them. But if I'm quite bullish on a company, because of the trading costs incurred on Hargreaves Lansdown as well, I'm just going to go in with a 5 to 10% of my portfolio straight away. I'm not going to try and own 15, 16, 17 different stocks in a 20 grand portfolio. I'm only going to own a few individual holdings, so I can just track them closely and keep an eye on them, really, especially in this sort of portfolio. Freetrade's a bit different, but in this sort of a portfolio, my main portfolio, I'm going to try and have my diversity through my index funds and my fund holdings, but then with my individual holdings, I'm going to try and, just concentrate and do my research and investigations into these stocks, evaluations into these stocks, and give them my full attention. And I'm only going to invest if I can see a potential good return over the long term. And I'm not investing in SPACs or penny stocks or anything like that. I'm the hare and the tortoise. I'd rather be the tortoise. I'd rather get to £1 million portfolio over 25 years than make a 100% profit in 5 minutes. That's not how I'm investing. Anyway, let's get into what I've invested in. Obviously, last time I went through Fundsmith, I went through all these funds last time. It's still my biggest holding. It's had a good couple of weeks. It's up again this week. It was 12% up last week. Now it's roughly about 14% up nearly. So that's not bad. The only thing I'm a bit on this is the fees, because I got trading a monthly fee of £5 last month, and I think that was a lot from some of the funds I'm invested in. So I've got to look at these fees. But I am planning on investing heavily into the S&P 500 index fund this year, which is only a 0.09% fee on that, which is basically free, isn't it, to hold it, besides the charges you get from holding stuff in Hargreaves Lansdown anyway. But it is a quality platform, really, for investing Hargreaves Lansdown. I'll come back to my individual holdings in a bit. Artemis Income's gone up again. A lot of my UK equity funds have gone up this week because obviously the UK stock market, the FTSE 100, has had a good week. The FTSE's back over 7,000. It's not been over that for over 12 months. it hasn't recovered as quickly as the S&P 500 has. So a lot of my UK income funds, UK equity funds have gone up this week. Jupiter Asian's a pretty solid performer in the portfolio. It's got some great companies in that fund. Bailey Gifford I'd already just spoke about. Lindsay Train, Lindsay Global. There's a bit of overlap in these. So I'm thinking about maybe consolidating my positions into one of the funds, maybe the global fund, and maybe just putting 700 from taking 700 out of the UK equity fund and putting it into the global fund to make that round that to 2,000, and then using the excess to invest in the S&P 500. That's just a thought there, just to consolidate a few of my positions, because there is quite a bit of overlap in the portfolio. The Scottish Morgan Investment Trust has had another banging week since I brought into it. I brought into it in the dip with it trading 3% below net asset value. Sometimes it doesn't really. It's got a lot of similar investments to the Bailey Gifford fund, but sometimes it can be undervalued even more, because the value of what it's holding in its portfolio can be worth more than what because it's structured as a stock. Its share price is basically run by what people are willing to pay for it at the time, like any individual stock is, whereas the fund it's valued on its underlying assets. So sometimes Scottish Mortgage can go down far more than the Bailey Gifford funds, because even though it's holding a lot of similar companies, because people are selling it quicker, and it's just obviously based on sales. Whereas the Gifford fund won't go down on its actual outflows; it will go down on what its underlying assets are. Whereas this is the opposite for Scottish Mortgage. It can be massively undervalued just because people are selling that particular stock, because it's structured like a stock, because it's an investment trust. And I like the percentage to China. The reason I invest in the Bailey Gifford fund is because I can average into it £100 a month, stuff like that. Whereas I don't really want to be doing £100 a month into the Scottish Mortgage fund, which I prefer, because I'll be getting a trading fee every time I invest into that fund. So that's had another great week. Finsbury Growth has also had a good week. Obviously, again, it's another UK equity investment trust. So that they've all had a pretty good week that week. They've greatly carried the portfolio. The S&P's not done bad, but that's been a consistent performer since I started investing in this core satellite sort of strategy, and I'm hoping to get more. Maybe have a 6,000 holding in this by the end of the year. So maybe consolidating my positions and pushing a bit more money into the S&P might not be such a bad idea. Obviously, I've spent a lot of capital this week, so I've only got £2,000 left in this portfolio now, which is around about 10%, which I'm happy with. But I've also got 50% of my portfolio, my stocks and shares, is of cash, so I've still got roughly about 16-17% in cash at the moment. And my my allocation of what I'm invested in is about, I'll just go into this now. It's about, find it, I've got it written down somewhere. Yeah, here we are. My cash is about 16-17%. My individual shares is about, in this particular portfolio, is about 12%. My investment trusts is about 12%, and my funds is about 62%. So 62, 18, 80%. Yeah. So yeah, I've got about 18% cash, 60% funds, 10% investment trusts, and 10% individual shares. That's more like it. I've broke it down on all my investments across all my different portfolios, but yeah, that's about right for there. So yeah, those are recap of all my funds and stuff that I'm holding. My first holding, and my biggest holding, is Alibaba. Now, I was going to invest heavily into this anyway. Obviously, the price. I'm a bit annoyed really, because the price has gone back up after it got fined 2.8 billion for the competition probe that was the Chinese government led into it. So it's not a really massive hit to the company as a whole. I'm currently getting through its annual reports and reading all of its annual reports. I've done a lot of research. I've done about 8-9 hours research this week into the stock. I have been on holiday. I do normally work for a living. I don't normally have all the time in the world to research these stocks, but I've done about 8-9 hours research into this stock, and I'm quite bullish on it. There are risks involved, but there's risks involved in any company. It is an unloved stock. It is an undervalued stock. I've done a valuation on it. I've done a whole video on it. If you want to check that out, it's on the page. And yeah, that's why, you know, I've currently got about an 8% holding across my entire portfolios of Alibaba, weight into my own portfolio, about 8% of my portfolio, because I've got my biggest holding in my Freetrade account as well. So I've got about an 8% holding, 7-8% holding into that. And I'm willing to go up to about 20% if I'm honest with you, but I'm just going to try and average in as the price, and hopefully the price gets a bit lower. You know, it might sound counterintuitive, but when I'm trying to build a position into an individual stock, I'd rather the price decrease so I can get it at a better price. And then once I've got the percentage holding that I want over the long term, it can incrementally get, you know, year in, year out, grow and give me compounded rates of return. Because potentially it's a potential 10 bagger, I think personally, a multi bagger. I'm not saying like, oh, it's gonna give me 100% return in a year's time, but I mean over 10 years, over 15 years, it's a potential multi bagger. And the more research I do into the company, the more bullish I'm on the company, the more I like the company. And it's you know, Charlie Munger, who's a famed investor who doesn't make very many investments, has placed a big bet through the Daily Journal Corporation with the equities that he holds in that, and he doesn't matter. You know, it's been about 10 years since he's made a big acquisition in that portfolio. But however, even though he has done that, I've still done my own research and worked out if I want the stock or not. I don't just buy everything they buy, him or Warren Buffett or, you know, anybody else. If I did, I'd own Coca-Cola. You know, it's not a great investment anymore. I'm not buying because they're buying. But I've generally done my own research into this. I was already liking the company, and the more I find out about the company, the more I like the company. It's like being able to invest in Amazon 10-15 years ago, I think, personally. And on scale, it's not far away, and it's got a bigger growing consumer market in China, pretty much as big as anywhere in the world or the world combined. It's just phenomenal. It owns Alipay and stuff like that. Alibaba does Alipay, which is like a PayPal sort of thing. It's got the biggest cloud computing in Asia, in the Chinese markets, and the majority of Chinese people, all their transactions are online. So that's a massive market for it. I think it's like 2 trillion. It's more than GDP in the country. It is transacted between transactions. Even people in huts selling, I don't know, bags of rice and stuff like that, or anything in China. You know, just not even like, you wouldn't even think it. They've got tablets that, you know, you pay for your Alipay and you pay online transactions with. So it's a massive growing market in China, and obviously people are being pulled out of poverty, so they've got more money to spend in these countries. It is looking at globalization, so you never know, you might see it come out into the Western world as time goes by. I have actually downloaded the app, and it's a very clean app, and it's very similar to Amazon, but it's a very clean, unfussy app. Alibaba.com. And it's got lots of subsidiaries. It's a really interesting company if you're interested in stuff like that. I'm not saying investing, but it's a very interesting company. So yeah, that's my biggest position. It's probably the most bullish I am on any particular company at the moment. The only company I've been as bullish on was Greggs last year at £12 a share, and I sold out at about £21 a share. It's now currently £23 a share. Really, I regret selling out of that, and that's what I'm going to try and do this time. I'm going to try and run my winners when I'm sure on stocks, because I don't just buy into individual stocks lightly. I do a lot of research on them before I buy into these stocks. Whereas funds, I like to, you know, it's a lot more passive and a lot easier way of investing. But I do enjoy the research into individual holdings. I've talked enough about that one for now, but I've done a whole video on it, so please check it out. It's very interesting and insightful. obviously I've made a position into Apple. Of all the software and technology companies and consumer companies, and it's a fashion company as well, really, isn't it? An iPhone and an iPad. It's got its an investor day on, I think it's the 21st of April, Tuesday coming, 21st of April 2021. It will go through all the new stuff that it's bringing out. It's a solid company. It pays a small dividend. It buys back its own shares at a reasonable price. It's got a PE of 35. And yeah, I can see, 10 years, it's going to give you steady, stable growth. And I just love the company. I think it's a fantastic company. And I wish I had brought it when Warren Buffett brought it. But I thought, no, I'm not sure. A lot of people, I'm like, it got to $1 billion valuation. I'm like, well, how much bigger can it get? Then it got to $1 trillion valuation, and you're like, well, it can't get any bigger than that. And now it's at a $2 trillion value. Do you know what I mean? It can get bigger than that, and it probably will get bigger than that. As you say, it's a popular product in China, which is a growing consumer market as well. It's got so many moats. It's untrue. It's brand moat. It's got, it's just like Buffett would say, it's a sticky company. So I've built a position in that. If the price dips a bit more, I'll be buying a bit more. My ideal price would be $60 a share, because I think that was a bargain. Because that would be around about where I value the company at, based on a 15% rate of return, so doubling your money every 5 years. But it's always going to trade on a higher multiple because it's Apple at the moment. Unless something drastically changes with this company, it's always going to trade on a higher multiple than, say, a 25 companies. So, but 35p is not too bad for a company of Apple's caliber, to be fair. And then finally, I've brought one share in Tesla. And if it's going to be a £7,000 a share in 5 years' time, then it's currently at £700 a share. It's going to be $7,000. If it's going to be, that's a 10 bagger in 5 years, though. If the half wrong, it's a 5 bagger. If the quarter wrong, it's a 3 bagger, a 2 bagger. So it's going to double your money. So I just thought I'd buy a share. I'm bullish on the company, but I'm not one of these. I like Teslas. Hopefully I'd own one day, and hopefully they become more affordable to be able to buy one. And I'm into all these electric cars and helping the environment. I think it's a great cause. The more I look into this company, also, the more I like it, and I'm quite bullish on it. The autonomous driving's the one for me. Like, that just knock Uber and Lyft and companies like this. If it can get an autonomous, and it's got the scale and the size and the resources to do it, it could absolutely just destroy that industry and make an absolute fortune from it. And it's not just a car company. It's more than that. And it's going to be a big company in the next 10, 15 years' time. So, I think I seen an interview with Scottish Morgan Investment, and they've held it for like 8, 9 years. And they've had like 4 times they've held it, and it's dropped 30% or more, but they've just kept on holding it. And then obviously in 2020, they've reaped the rewards massively from that. I know they've cut their positions in it now, but they've still got a sizable position across all their portfolios in Tesla. That's for a reason. And these aren't silly people. These are very, very intelligent people. I think there is a lot of hype surrounding EV companies at the moment. You got your Neos, you got your Arrival, which was also it was a SPAC before it went SPAC before that, and there was a lot of any SPAC that had an EV attached to it. There's a lot of hype in it, and I do think the EV industry and companies as a whole is in a bubble. Was really a major bubble a few months ago, and I think that it's the Tesla effect, the Elon Musk effect. But I think Tesla is so far ahead, even of car manufacturers with an EV car. His model, they're still trying to catch up with the original Model S, and now look at where the company is with theirs. So I think if there's going to be a winner in this industry, it's going to be Tesla. It's hands down going to be Tesla. Neo might do okay in China, but there's just, anything related to EV, because of the success of Tesla, has just, the prices are ridiculous. But I do believe Tesla to be a great company going forward. So yeah, these are my 3 individual holdings. Apple. But it's had a good run, 5 years. Nice run. You don't get much information on Apple or on any stocks listed in the States on on Hargreaves Lansdown app, but you can get all this information off Yahoo Finance, Simply Wall Street. It's all there for you to have a look at. And then Alibaba. So I've got Alibaba, Apple and Tesla. Those are the three companies. Obviously they're showing red, but like, as ever, whenever I buy into a stock, it always goes down. But it's all right because I can buy it later on in the year at cheaper prices, hopefully. But obviously, and then it'll probably go down more when I put in more of it. A lot of it being down at the moment is due to the pound increasing in value also. So, and the pound, if I buy it because of the conversion, if the pound goes up, my actual, because I'm holding it in pound coins, in pound, my holdings are in pounds sterling. So when the dollar gets weaker against the pound, because the shares are exchanged in dollars, my holding actually gets, gets smaller. So I'd rather be buying in when the dollar is weaker against the pound, and then the dollar strengthens against the pound, and my holding will increase, if that makes sense. But in the long term, it's not really going to make a difference because I'm buying for these companies that hope that they increase in value. So I'm not, if I could predict currency and interest rates and stuff like that, I'd have been a billionaire years ago, wouldn't I? So yeah, that's not what I'm really looking at. It does have an effect on it. There is a currency risk in investing in foreign stocks on the different exchanges. Yeah, so I hope you've enjoyed the first episode of this portfolio. I do go off on a tangent sometimes and talk a lot about a lot of stuff, but yeah, I'm happy with the portfolio overall. I'm happy with my individual holdings. I'm still planning on dollar cost averaging into my S&P 500 index, putting a bit more in Artemis Income and Jupiter Asia, and maybe consolidating some positions. Yeah, I'm not going to put any more in Fundsmith now because I'm happy with the holding, and it's quite a high fee really. So I'm just going to leave that as it is for now. And if there are any more opportunities, that's probably going to be the one I'm going to skim, reduce in size, just to so if I've got any buying opportunities, rather than use up all my cash reserves, I might use some of Fundsmith, some of the Fundsmith holdings to invest into my individual holdings if I can get them at better prices. So yeah, that's my strategy at the moment. Drop your thoughts and comments in the comment section. Let me know what you think of my strategy. Let me know what you think of my portfolio. I always enjoy feedback. If you've enjoyed the video, can I just ask you to subscribe? Give it a thumb, hit the notification bell for future portfolio updates. I'll try and get one out monthly. This one's a bit sooner because the last one was just a preview. It's a fairly new, the way I'm investing in this portfolio is fairly new. I've changed my whole strategy from last year because I was getting a bit sidetracked. I was trying to invest in things, I wasn't really looking at the price of what I was investing in. I was just like, I want to own this company, I'm going to own it. And I felt like I was getting a bit carried away, and then GameStop happened, and then I thought, you know what, I need to have a re-evaluate of how I'm investing. So that's why I've currently have a portfolio that looks like this. So if just drop your comments in the thing here, I'll try and get back to you. If there's anything you want to know, ask me, and I'll try and answer it best I can. Also, yes, as I said, just subscribe to the channel if you've enjoyed the video, and give it a thumbs up. It help the channel grow. Hope you've enjoyed the video. Yeah, have a good day. Thank you.